Now, you might be like most people and love to spend money on entertainment, hobbies, and vices. Whether it's movies, music, sports, games, books, alcohol, tobacco, or gambling, Americans in particular spend billions of dollars every year on these non-essential goods and services. How can you balance your indulgences with your savings goals? Welcome to Fun Financial Insights, the channel that helps you improve yourself and your finances one episode at a time in an entertaining way. In today's episode, we're going to show you how to save $10,000 in a year with 10 simple steps. Sounds impossible? Well, it's not if you just follow these tips and tricks to spend less and save more. And if you watch till the end, I'm also going to do a quick review of the budgeting apps that can help you towards this goal. Let's get started. Step number 1, break down the amount you need to save. Saving $10,000 may seem like a huge task, but if you break it down, it's much more manageable. If you want to save $10,000 in a year, you'll have to save $833.33 off your monthly budget. Still overwhelming? Well, that's the same as $384.61 every 2 weeks, or $192.31 every week. And if you really want to break it all the way down, it's only $27.40 every day. See? It's not that scary. Step number 2, review your budget and personal finances. To know where you can save money, you first have to know where your money is going. Look over your bank and credit card statements for the past year to determine what you're spending money on. Look at essential costs such as housing, transportation, food, utilities, healthcare, and loan payments. And you can also use apps like YNAB, Mint, EveryDollar, or Rocket Money. And in case you don't know which one to choose, continue watching because we'll do a breakdown of each of these later in the episode. Step number 3, cut out unnecessary monthly spending. Look at your budget to see what you can do without. Subscriptions such as streaming services are billed every month, and then you forget about them. Look carefully to see which ones you can eliminate, and don't let the fact that they're low priced fool you. Eliminate a few subscriptions at just $5 each month can add up pretty quickly. Step number 4, don't pay interest on your credit cards. If you're carrying a balance on your credit cards, you're paying extra money every month for that tank of gas you've already used and that dinner you've long forgotten. Pay off your credit cards and then stop using them. If you have credit cards that charge an annual fee, consider getting rid of those first. There are so many fee-free cards that have rewards and other bells and whistles. There's really no good reason to pay an annual fee if you're not getting the value back in rewards you actually use. And let me just say, saving money is not only good for your wallet, but also good for your well-being. According to a 2023 report from Northwestern Mutual, 50% of Americans are building savings to address economic uncertainty. But how about you? Are you ready to take charge of your finances and save $10,000 in a year? Well, before we go on, take the first step to prove you're ready by subscribing to our channel. And don't forget to turn on the notifications bell if you haven't already so that you don't miss a single video. Let's see the remaining steps. Step number 5, reduce discretionary spending. Discretionary spending is the money you spend on things that are not essential, but that make you happy or improve your quality of life. Examples include entertainment, hobbies, travel, gifts, or eating out. While you don't have to cut out all discretionary spending, you can reduce it by finding cheaper or free alternatives. For example, instead of going to the movies, you can watch a movie at home. Instead of buying a new book, you can borrow one from the library. Instead of going out for coffee, you can make your own at home. Step number 6 is a huge opportunity. Check your grocery bill. Food is one of the biggest expenses for most households, but it's also one of the easiest to save on. You can save money on groceries by planning your meals ahead, making a shopping list, buying in bulk, using coupons, shopping at discount stores, buying generic brands, cooking at home, and avoiding food waste. Step number 7, examine your fixed expenses. Fixed expenses are the costs that you have to pay every month, no matter what. Examples include rent, mortgage, car payment, insurance, utilities, and phone bill. While in most cases you can't eliminate these costs altogether, you can try to lower them by negotiating or switching providers or refinancing or even downsizing or bundling services. Step 8, save your windfalls in an emergency fund. A windfall is any unexpected money that you receive, such as a tax refund, a bonus, a gift, or an inheritance. And instead of spending it on something you don't need, save it in an emergency fund. An emergency fund is a stash of cash that you have put aside for unexpected expenses, such as a car repair, or a medical bill, or a job loss. Having an emergency fund can help you avoid going into debt or dipping into your savings when something goes wrong. Step number 9, start a side hustle. A side hustle is any activity that you do outside of your main job to earn extra income. Examples include freelancing, tutoring, selling crafts, blogging, or driving for a ride-sharing service. A side hustle can help you boost your income and reach your savings goal even faster. Plus, it can be fun and rewarding to pursue your passion or learn a new skill. And step number 10, make your savings automatic. One of the best ways to save money is to make it automatic. You can do this by setting up a direct deposit from your paycheck to your savings account, or by using an app that automatically transfers a small amount of money from your checking account to your savings account every day or week or month. This way, you don't have to think about saving, and you won't be tempted to spend the money that you've already saved. Now, as promised, what budgeting apps can make these steps even easier for you to follow? Well, let's start with YNAB, which stands for You Need a Budget. YNAB is a budgeting app that uses a zero-based budgeting approach, which means you assign every dollar a job, whether it's for spending, saving, or investing. YNAB helps you track your income and expenses, set goals, and adjust your budget as needed. YNAB costs $84 per year after a free 2-month trial. Next, we have EveryDollar, which is a budgeting app from Dave Ramsey's team. Dave Ramsey is a well-known personal finance guru who advocates for a debt-free lifestyle. EveryDollar follows his principles and helps you create a monthly budget based on your income and expenses. You can also track your progress towards paying off your debt and building your emergency fund. EveryDollar has a free version that requires manual entry of your transactions, or a paid version that connects to your bank accounts for just $129.99 per year. Moving on, we have Mint, which is one of the oldest and most popular budgeting apps out there. Mint is part of the Intuit family of products, which also includes TurboTax and QuickBooks. Mint allows you to connect multiple finance accounts in one app, such as your bank accounts, credit cards, loans, and investments. Mint automatically categorizes your transactions and shows you your spending pattern, net worth, and credit score. Mint is completely free to use, but it does show ads for financial products that may or may not suit your needs. Finally, we have Rocket Money, which is a relatively new budgeting app that aims to make budgeting easy and personalized. Rocket Money lets you customize your budget categories and goals and gives you feedback and suggestions on how to improve your financial habits. Rocket Money also has a feature that helps you negotiate and cancel unwanted subscriptions, which can save you money in the long run. Rocket Money costs $4.99 per month or $49.99 per year. So which budgeting app is best for you? Well, it depends on your preferences and goals. If you want a simple and focused budget that follows Dave Ramsey's principles, you might like EveryDollar. If you want a complex and detailed budget that gives you more control and flexibility, you might prefer YNAB. If you want a comprehensive and convenient budget that shows you your entire financial picture, you might enjoy Mint. And if you want a personalized and interactive budget that helps you optimize your spending and savings, you might choose Rocket Money. Personally speaking, I think YNAB and EveryDollar are the best budgeting apps out of the 4 because they help you plan ahead and be intentional with your money. They also have a strong user community that can support you and motivate you to stick to your budget. Of course, you can try out any of these budgeting apps for yourself and see which one works best for you. The most important thing is to find a budgeting system that you can stick to and helps you achieve your financial goals of saving $10,000 in a year. And that's it, 10 practical strategies on how to save $10,000 a year and apps that can help you do it. If you follow these steps, you'll be amazed at how much money you can save in a short period of time. And once you reach your goals, you can use that money for whatever you want. Whether it's paying off debt, investing, traveling, or buying your dream home, the sky's the limit. Thank you for watching this episode of Fun Financial Insights. And if you enjoyed this video, please hit the like button and leave a comment and let us know which of these steps you found most valuable. We'd love to hear from you. Until next time, stay smart and have fun with your money.